Where are you seeing the drivers of returns for 2023?
Okay, good morning. So we think that 2023 is going to be not easy. We published an outlook called Walking the Tightrope, I think, which kind of tells the story. But one thing we think is quite likely is that while inflation is high, it's already probably peaked and going to start to fall. And in these sorts of situations, historically, high but falling inflation has been an opportunity to generate real positive real returns from equities. So against this, we think there's a couple of strategies to focus on. One is focus on profits from kind of forced reallocation of spending towards things like clean energy and infrastructure. So we think that can be a catalyst there. And then secondly, against the sort of uncertain backdrop, focus on dividends and income as a component of total returns as well. So those two strategies.
What about China, especially given that we are seeing more signs of COVID restrictions being eased, but at the same time, we have seen such a rally for Chinese equities already in the past month. Is there still room for some upside?
Yeah, we're cautiously optimistic on reopening in China. It's going to be one of the big stories next year, and it could have serious ramifications not just for Asia earnings and market performance, but globally in terms of inflation, energy prices, et cetera. So if you look at the bottom in 2020, most markets were lagging China when we were talking about China being first in, first out of COVID, and obviously a lot of that, all that performance was given back. So if we kind of restart the clock on a reopening for China, certainly a lot of it's people are anticipating that, the market's anticipating that, but we think there's probably significant upside to go, let's say 25 to 40%.
I want to take a look at this chart on the Bloomberg terminal as well. It shows the EM FX index trading higher in tandem with the MSCI China index. Do you see now that there is a floor under EM currencies? This is the end of the reign of the dollar, and it's time to take a good look at EM markets.
Yeah, absolutely. I mean, so the change in the interest rate framework has produced a very strong dollar, and we're most of the way there. Terminal rates are likely to be around 5, and in the first half of next year. So the strong dollar trade is mostly done, and so the opposite side of that is obviously weaker dollar, and weaker dollar is generally positive for EM markets. Again, the big swing factor is how does China get out of COVID and how fast. So we think that'll be the main driver of EM, and certainly it's time to start to look at EM in that context.
Yeah, it is probably going to be a rough road out of COVID zero settings, but I want to get your views on the yuan as well. It's now tracking below 7 against the US dollar. Where do you see it heading from here?
I mean, around where it is now is probably the PBOC is relatively comfortable. If you're asking about a sharp weakness from here, I don't think it's something that's in our base case, but anything's possible, and certainly the currency is mostly completely in control of the PBOC in China. So leave it there.